now you will see a graph excuse me, graph showing a time trend regarding the number of United States banks, American banks, from 1980s to 2020s. And there are three lines. First, let me explain about this. So this is about the conglomeration and the concentration of the American banks. So if you need to look at the gray line first, the number of failure banks. So starting from 1980 to 1990 or 1994, there were a lot of failures, bankruptcies of the banks in the United States. And as a result, these failed banks were acquired by other banks. So you can see a lot of mergers, the dashed lines. This is an M&A, mergers or the acquisitions between two or more banks into a single entity. So there was a lot of M&A activities in that period. But on the contrast, the new charters, so this means the new foundation or the new establishment of a new bank, and recently there is nothing which is going to start newly. So it means the numbers will become smaller and smaller, and there will be no banks. So therefore, what we're going to see is that the number shrinks from here to here. So that is a supplementary explanation about the American banking market, which experienced the concentration and conglomeration. And let me come back to the mutual savings banks. So I'm going to talk about especially the mutual savings banks in the Korean context. So in different countries, there are different origins of those mutual savings banks, but I'm going to focus on the Korean mutual savings banks, okay? So let me talk about the origin of these savings banks. So some Korean students already know that we had a Japanese occupation in the history, and also international students might know that we were under the Japanese occupation. So at the time, there was no good or a sound or large financial institutions in Korea. But there were some wealthy individuals and some families, so they started lending businesses in Korea and without a formal approval. So there was a private lending market at the time. But the problem is that this is not regulated by the law, so there is no restriction about the interest rate that they can set. So for example, a typical example is that the interest rate at the time was 40%, which means after 1 year, if you borrow $100, you need to pay $140. This is a striking number, and obviously the borrowers are not going to welcome this, so there was certain problem. The reason that there was a private lending institutions is that at the time, the more larger financial institutions, including the banks, were concentrating on heavy industry, because that time was the time of the World War II, and most of the businesses was concentrating on chemicals, mechanics, and weapons, right? So those established financial institutions didn't care about individuals, and therefore some individuals who need some money, they need to go to these loan sharks. And as I said, excessively high interest rates harm these consumers. Then, after the liberalization from the Japanese occupation, and we had our own republics, and here comes the president Park Chung-hee. So he was a dictator. He was a military. He had a military coup, and he overthrown the previous government, and he became a sole dictator of this country, and he had a full power to control the entire country, and he decreed emergency economic situation on 1972 to declare that these private lending institutions should be banned, and the government freezed the private loan interest rate in order to help the consumers who are in trouble, and also they allowed some chances for these private lenders to be chartered. In other words, to be accredited, to be approved by the government if they want. But if they want to be a financial institutions, if they want to be called as the financial institutions, they must accept certain rules. So they are going to follow the law, and they are going to be monitored by the government. And that time was the time when these private lenders became a certain kind of institutions. And then there was another reform about the market, Mutual Savings Banks Act of 2001. So they before the 2001, they didn't use the term the banks. So they were, if any consumer can acknowledge that these are not the banks, and they are these, previously they were called the loan sharks. But there was a problem again in 1997. So this year is very, very important for Korean economy. I'm going to repeat that year again and again throughout the semester because we had the Asian financial crisis at the time. And as a result, a lot of corporations defaulted, a lot of banks also defaulted, and a lot of consumers claimed private bankruptcies. And similarly, those private lenders also suffered a lot from the crisis. And they asked to the policymakers to help them in order to survive. So therefore, in the Congress, they relaxed the heavy regulation on these institutions, and also they allowed the name, the term, the savings banks. So after that, so before the change, before the reform, we had a clear distinction between the commercial banks that can use the name Deng Deng Bank, but we have a different institution, savings institutions. But after the change, they can entitle themselves as banks, and therefore, of course, they should note they should declare themselves as savings banks, which is slightly different, but that's a very small part. So as we learned, the name of the banks, the word has a strong power of the trust. If something is called as banks, that means it is authorized, it is chartered by the government, and the government guarantees that this institution has a good credibility and good ability, right? So it is, although it's just a change of the name, it has a strong impact on our economy. So after the change, now it looks like very similar to the commercial banks. So everyone rushed to the savings banks because at the time they were offering higher deposit interest rate. So if you have two choices, you can go to a commercial bank but with a lower deposit interest, or you can choose to deposit your money into these savings banks, which seems very similar but with a very high deposit interest rate. And nobody would choose this one because they want to make some money, right? So therefore, from that moment, a lot of depositors, a lot of consumers started to put their money into these so-called savings banks. And because they are going to provide higher deposit interest rates in order to compete with the commercial banks, they also need to make a lot of money from their lending businesses. And one of the way is from the real estate market. So let me talk about the project financing. A project financing is a term given to a financial technique. So usually there's a bank or any other lender, and it gives money to the corporation. In the case, as we have did in our group activity, the company needs to sign on the loan contract, and the name of the borrower is the corporation. But in the project financing, this is not the corporation it borrows, which is borrowing from the bank, but the project of a specific project of that corporation is trying to borrow. So this is here in this case, in the project financing case, corporation does not have the responsibility about the outcome. Project is having the responsibility to pay the money back to the lending institutions. So the reason is because if corporation should pay the money back, then this company can have 3 different projects, and it is good, but something went wrong for the third one only. But still, it makes, even if this is a small problem, still the corporation, the entire company will suffer from it. So the other good projects will not survive together because they are binded together in the name of the corporation. So the project financing, this is an attempt to give some firewall between the projects. So this project is separated, this project is separated, this project is separated. So even if it goes wrong, still this project can continue, this project can continue. So this is the aim of the project financing. And then one of the areas where project financing is popular is a real estate development because it requires a lot of money. So generally, single company cannot borrow the required money from a single institution. So they want to diversify their risk. And using this financing technique before around that area, after the deregulation in 2001, a lot of savings banks invested huge money into the real estate market using the project financing technique. Unfortunately for them, there was a global financial crisis of 2008 and 9, and the real estate market collapsed. So a lot of project financing went wrong. So it resulted in the mutual savings bank crisis in Korea. And there was another problem inside this, because even if there was a global financial crisis, because the original purpose of the project financing is to separate this from others, so that in order to be safer, it can still work even if we have a crisis. However, they were not, because there was a lot of fraud. So a lot of mutual savings banks, they were corrupted. So the government found out that in the project financings that these savings institutions invested, many of them were involved in accounting fraud and some embezzlement. So as a result, the owners of these mutual savings banks went to jail, and people totally lost the trust or some belief about the mutual savings banks. So therefore, even though there were a lot of good mutual savings banks in the market, people don't want to give the money to them, even if they were not committing the fraud. So the entire market collapsed. And furthermore, some mutual saving, it was found out from the prosecutor's investigation, some of them were giving bribery to the government officials. So later, it became a very large political scandal. So after that, generally, people don't want to use the savings banks, and they are in trouble. And the funny thing about the history is that sometimes the things can be repeated. And during the COVID-19 pandemic, we had a lot of liquidity. So you had a lot of, because at the time, the central bank set their interest rate almost zero. So they had a zero interest rate policies, and it created a lot of money supply into the economies around the world. So mutual savings banks also were on that trend. So they again invested huge money on the project financing. And then now the pandemic is gone, and there is the opposite side of the monetary policy. So the money supply is decreasing, and they are in trouble. And in the last week, the Financial Supervisory Service, which is the monitoring authority of the Korean market, they announced that some mutual savings banks should be closed down today. So maybe in the upcoming 1 or 2 months, some of the mutual savings banks are going to claim bankruptcy. So they are having exactly the same problem again. So that was about the savings bank crisis in 2011 and going today. So we have some lessons. First, in case of the financial institutions, the governments and the monitoring authorities should quickly decide whether to save these financial institutions or to shut down these financial institutions. If you let bad financial institutions to continue to operate, then those will affect the rest of the financial institutions, even if the rest are following the rules and they are doing good. So these bad impaired financial institutions should be removed preemptively. And second, in the transactions, especially lending, we should prohibit it that certain parties are engaged in both of the parties. So sometimes when there is a relationship between the borrower and the lender, there is an incentive to give the money to that borrower, even if that's not credible. That's not credible. So we should not allow to borrow from the related financial institutions. And also, it is important to establish a good external auditing and the compliance system in the financial institutions. Okay, and the last one is about the credit cooperatives. I'm going to, I removed a lot of my lecture notes from the last year about the credit cooperatives because we are going to have a lot of group activities in this semester. So let me just be brief. So a credit cooperative is also a financial institution that provides both the deposit services and the lending services, but the one special identity is that they are going to have special customers, and these customers should have some kind of social ties with the credit cooperative. So I'd like to highlight the differences between a corporation and a cooperative. First, corporation is for profit. So this is a private company and they seek to make some money out of their business. However, generally, the cooperatives are not for profit but for social benefits. And in the ownership, the corporations are owned by shareholders, and there is a rule that generally you are going to have one share and you can vote in the shareholders meeting or in the shareholders meeting. But on the other hand, in the cooperatives, there is no one share, one vote rule, but one person, one vote rule. So everyone has the same right regarding their voting power. If you are rich or even if you are poor, it does not matter in the case of the cooperatives because you have the same voting power in the management of the cooperatives. So the corporation, the advantages is that it can raise a lot of money because if you are rich, you want to invest here, not here, because if you are rich and if you want to be influential in a company's management, you can buy a lot of shares and you can appoint a director, you can appoint an executive, you can do whatever you want in that company. However, if you are participating in a cooperative, you are having the same right with a poor person, so you have no incentive to invest huge money here. So the major benefit of having this corporation in our system is that it is very efficient. And because there are large shareholders, it is very easy to make decisions quickly. But on the other hand, in the case of the cooperatives, everyone has the same right. Everyone can say their own opinions. So you must try to make a conversation with others in order to put your decision into their actions. So it is more democratic. it is more economic, but this is more democratic system. So one major example of the cooperatives around the world is the FC Barcelona, the football club in Spain. So this club was established as a cooperative long before ago. So this is not for the profit. So the major purpose of this football club is to entertain their citizens. So they don't try to make a lot of money out of the business, but they try to play better. So that's why FC Barcelona was very successful for the last decade. Anyway, the same logics can be applied to the financial market. So commercial banks are established as corporations, so they are incorporated and they are for the profits. So they want to charge a higher loan interest rate and they want to minimize the deposit interest rate, and the spread is their profit. However, there are some cooperatives in the lending market, and they work not for their profit, they work for the citizens. So generally the credit cooperatives are established in a regional basis, or depending on their workplaces. So they provide the loans and they take deposits from these members only. Outside, if you are not a member of this community, you cannot join the credit cooperative because this is exclusively for these members in that region. And another benefit of these cooperatives is that they are not for the profit. And there is a strict one principle about the government taxation. The government taxation will be everywhere if you make some money. Which means, on the contrary, if you do not try to make money, there is no taxation. So this is not for the profit organization. Therefore, generally they are tax exempted. So they don't pay taxes, and the cost savings from the taxes, they can invest for their members. So what we can see is that there are differences between the interest rate. So let's say you want to buy a car and you go to a bank or a credit union. If you go to a bank, this is the loan interest rate you pay. However, if you go to your own credit union, your loan interest rate is lower because they don't want to make some profit. They want to help you. And at the same time, if you visit these institutions as depositors, and there are also differences, the bank's interest rate is this one, the gray dashed line, which is a lower one. So the banks will give you a lower interest for your deposits. But for the same amount of money, the credit unions will give you higher deposit interest rate because their purpose is to help you, right? So credit unions spread is smaller, which means their profitability is less than the commercial ones. However, they have social reasons for their existence. So they also are in the financial markets in order to help the citizens. And you can see that a very interesting thing from the balance sheet of these credit cooperatives. What I want to emphasize is that if you look at the liabilities and equity, in case of commercial banks, the large portion of the liabilities were deposit, right? However, here you can see shares dash deposits, because depositors, here in the case of the credit cooperatives, they are also the owners of the same institution. So if you put the money in that credit cooperative, you are the owner and you are a depositor. Okay, so that's the difference from the commercial banks. So again, there are a lot of the money comes from the owners, which is different from the commercial banks. Okay, so that's the end for the credit cooperative. So in this chapter, we have learned about the basics, fundamental principles in banking industry, and we also talked about 3 different players: commercial banks, mutual savings banks, and credit cooperatives. And as you can see, although they are slightly different, the major actions, their major services are almost the same in the sense that they provide the loans and they take deposit from the consumers. Okay, and the next chapter is about the finance companies, which are non-depository institutions.